Experts are split on whether the AI boom is real growth or the decade's biggest bubble. Some say artificial intelligence will keep soaring, while others warn we're heading for a massive crash. So here's the question millions of investors are asking. Is the AI bubble real in 2026? Let's focus on what really matters. Which stocks could still win even if the market corrects? Even if a bubble bursts, smart stock plays can protect and grow your portfolio. Welcome to Money Mastery, your step-by-step guide to financial freedom and wealth creation. We're cutting through the noise to give you a clear AI outlook, address bubble fears, and show where smart investors are positioning themselves right now. Let's explore whether the AI market is experiencing a speculative bubble and what that means for investors. A bubble isn't just prices going up, it's an unsustainable explosion driven by speculation rather than real fundamentals. In a bubble, speculation overwhelms fundamentals, pushing prices far beyond what underlying value supports. AI companies like OpenAI and Anthropic have attracted massive capital alongside countless other startups. In 2025 alone, these companies raised a staggering $150 billion. Major institutions are now warning that AI valuations may be stretched too thin. The Bank of England and other financial analysts are signaling concerns about AI stock valuations becoming overheated. Current AI valuations mirror patterns from past market bubbles, showing similar warning signs. Much of this capital is concentrated in a few mega-cap tech names, which historically increases risk. But is the bubble actually popping or just evolving into something different? A bubble doesn't have to pop all at once. It can deflate slowly or rotate into other areas. Markets are shifting from hype-driven growth to fundamentals-based selection as AI matures. If AI growth slows, it could ripple through valuations, market sentiment, and investment strategies. To avoid losses, watch for these critical warning signs in the market. Market strain shows up through high concentration, elevated valuations, speculative spending without earnings, and weak profitability. Despite bubble concerns, smart investors are still finding solid opportunities in AI. Just because there's bubble talk doesn't mean AI vanishes from the investment landscape. Companies like Amphenol, Alphabet, Evercore, and Reddit are trading near buy points with strong fundamentals. Globus Medical also represents a compelling opportunity in medical technology's AI adoption. These opportunities span data centers, AI adoption, advertising revenue, and broader industry trends. So how should you approach AI investing in 2026 with both power and risk present? A smart approach focuses on solid earnings, uses stop losses, maintains diversification, and watches for leadership rotation. If tech shows weakness, capital may rotate into value opportunities like FTSE 100 names. Let's bring this all together with a balanced perspective. Bubble signs are present, but AI's fundamental importance hasn't disappeared. What matters most is your strategy, combining balance, caution, and discipline to navigate whatever comes next. If you found this helpful, hit like and subscribe, and let me know in the comments whether you think AI is a bubble or a real opportunity. In the next video, we'll walk through a safe AI investment checklist, covering the metrics that truly matter before you buy. Thank you for watching, and I'll see you in the next video.